Welcome back. It's about that time that we speak about the markets that are disrupting what is going on in our markets and the business at large. Now, with me in studio is Victor Koech, who's a research analyst. And Victor, a very good evening to you. I'd like us to start off by taking a look at what is going on at the NSE. If you were very keen, all the share indices from the 20 share index, the 25 share index, and the all share index, all of them had a drop. The 20 share index had a drop of 4.42 points. The 25 share index had a drop of 3.23 points, and the all share index had a drop of 0.45 points. What exactly would you attribute this to?
I think this is a general global trend. We've seen globally, investor sentiments have turned negative towards equities. People are basically reducing their take on global equities. As Kenya, we are belonging to the emerging market of equities. So people are trying to reduce the volatility, or rather the risk they have in their portfolios. So you would expect, actually since Trump tweeted, rather the trade war began with the Trump's tweet, we've seen investors basically selling off and staying off the equity market. That has meant that there have been less informationally motivated investors into the market. That's why you see the drop in prices.
And how long will this situation, how long will we see this situation for? Is it a stagnant situation, or are we set to see some sort of change at some point?
It's quite fluid at the moment. China, for example, has said they're not interested in going back to talk to the US. So that makes it a bit tricky. People are generally, or rather the market sentiment is Trump is trying to get a hand, as the elections is about, the US election is heating up right now. So maybe he's looking for attention. That's what people believe. So heading towards 2020, it's quite fluid. But I think it's a good opportunity for local investors to come in, because especially the banks have gone through such a hard drop. It's actually a really good buy right now.
All right. Yeah. A proper case of politics affecting the markets. Yeah. All right, now, looking at the gainers, Stanley Fahari income has witnessed a gain of 9.09%, with a current market price of 8.4 as opposed to yesterday's 7.7. Your sentiments on that?
I think that's a price correction, because the stock is currently trading at its 52-week low. So I think the market is correcting for the huge drop in price. Normally that usually happens. And actually it's trading below our target. Our target value for that stock is about 15 shillings. So there's still upside for investors who want to invest still.
All right, now, another company that caught my eye is the Kenya Power. Kenya Power is one of the top losers this evening at today's closing bell, and at the same time, it's a mover trading shares at worth 1,025,100. Kindly unpack for us this particular performance.
So today there was a headline in a certain newspaper in Kenya about KPLC, a negative headline. So I think investors are re-evaluating the prospects on that stock. I think then the prospect on it is currently negative, given the news was basically saying that KPLC was unable to sign an IPA with a certain independent power producer. I think that is why there's huge movement on it, because of that market moving news that happened today morning. Yeah.
And of course, just to quickly take you through the three companies that hardly ever miss when it comes to movers and shakers. That's Equity Group Holdings that traded shares worth 3,225,100. Cooperative Bank of Kenya Limited traded shares worth 5,913,600, and Safaricom Limited traded shares worth 13,510,200.
So I think for the banks, they've announced relatively good results, especially equity. Profit after tax was up 4%. And now that the prices have dropped so suddenly, we've seen actually today foreign investors coming in. I think we're likely to see them continuing being top movers as people try to get position to the stock, Safaricom, Equity, KCB, and Cooperative Bank. Yeah.
All right. Now, as we continue talking about the financial institutions, I'd like us to zero in on this particular bank, the Kenya Commercial Bank. Now, the Kenya Commercial Bank has released its net profit of the first quarter of the year 2019, showing a net profit of 5.8 billion Kenyan shillings, an increment of 11%. Now, Victor, what would you say ascribed to their profit increment?
So the top line basically was up. Top line, you're talking about interest income. It was up. Non-funded income was up as well. Pair that with the fact that the loan loss provisions went down this time, in line with the industry in general. I think that gave them the tailwinds to record, I think, a profit. I think that's an earning surprise for me, at 11% increase, yeah.
All right. Yeah. Now, the return on average has increased this year as opposed to last year. How does this compare in the industry?
In line with the industry, the interest income and non-funded income growth is in line with the industry, generally speaking. What is really unique about KCB, I would say that they kept their costs quite low, operating costs. One of the rivals had their operating costs go up by 16%, actually, which is quite good for them. Loan loss provision fell significantly. Yeah. That is unique to them. But it could be they actually really got really good loans this quarter, yeah, compared to last Q1 2018.
In 2018, all right. Now, KCB's non-performing loans have fallen, and their loan advances increased from 11.4 billion to 12.1 billion, as government securities rose from 2.5 billion to 2.7 billion. Now, my question comes in here. It's clear that the banks are lending more to the government because they're less risky to invest in. So with that said, would you say there's a credit crunch in Kenya?
There has been a credit crunch. With the credit crunch, we have to discuss more about distribution rather than its intensity. I think because of the rate caps, banks are forced to lend only to those people who fit within the cap. So it's quite narrow. So only very few companies, people do actually qualify to get the loans at the interest rates they have to give in. So there actually is a credit crunch, given SMEs and a lot of companies don't actually fit within the gap. So one of the key issues we've had is working capital financing, which is basically most of the time unsecured. So it's usually away from the brackets they're supposed to lend. So there is actually a credit crunch. In terms of, do you mind reminding me your first question?
My question actually was,
the first part,
is there a credit crunch in Kenya? And well, let me just add this. What is moving forward, what is the best way or the cheaper way of financing loans? That's a very complicated question. The simplest answer I could tell you, and the quickest way to do so, is if government borrowing goes down. Because as a bank, technically the lending they give to government is risk-free. Government basically should be the lowest cost. Basically should be given it at the lowest. So they set there's something called the benchmark. So if the benchmark rate, that is actually, I think the 10-year is about 12.4%. If government borrowing reduces and the supplies of these government securities dwindle, we'll probably see more lending at lower rates, yeah. All right. Yeah. Okay. I'd like us to move away from that in just a bit. Now, President Cheruiyot today launched the Kenya Mortgage Refinancing Company, KMRC. The company is an initiative by the World Bank and the National Treasury in a bid to promote affordable housing, which is part of the President's Big Four agenda. Just to let you in on some facts. Now, there are only 26,000 mortgages in Kenya, and well, getting a mortgage is quite a hassle because the mortgage rates are quite high. With that said, the World Bank and the Treasury have come up with the KMRC so as to lend banks funds that way they can the banks can be able to issue loans to individuals at single-digit interest rates. So first things first, Victor.
Yeah.
Which banks do you see working with the World Bank and the Treasury on this project?
I expect the market leaders in this segment, in the mortgage segment, we're talking about Standard Chartered and KBCB. But I will not be surprised if the likes of Equity got into the game as well. Because the issue with banks giving out mortgage was the fact that they did not have access to long-term capital or long-term funding to lend out. So typically banks have to be very liquid. So the most I usually see banks demand in terms of government securities around 7-year and the 5-year. That's probably the maximum they can allocate funds to. And that is because on this other end, customers really do demand the cash a lot, quite a lot. There's fewer demand for long-term products that will lock in the money for long term so that they can actually lend to projects that have a long-term outlook. For example, mortgages. So mortgages, we're talking about 24 years and above, or 10 years, depending on the market out here. But typically, it's around the 20-year mark.
All right, now you've given us quite a bulky analysis right there. Now, what criteria will the World Bank and Treasury be using to disburse these funds to the banks?
At the moment, it's quite unclear.
Yeah, it is.
But I think a lot of the criteria will be around pricing, because the initiative of...
When you say pricing, what are we looking at here?
So I think one of the criteria they might put in place is for them to give you money, you have to lend this money at a rate that is acceptable to Treasury and World Bank and the other stakeholders, whose main objective is not necessarily to make profit out of forming this company, but to make Nini accessible and cheaper. If they are successful, actually, if they could create more capital to these banks, I think, yeah, they can actually force the mortgage rates downwards. Yeah.
Okay. And so how do you think they will, the interest rates are going to be computed?
That's a very interesting question. One of the key tenets, I think, of this mortgage company would be they have to go to the capital markets to get funding. The key issue with that is one of the key clients will be pension funds. And pension funds will not lend to this scheme, or rather ascribe to the bonds that this company will issue lower than the government. So I think at the end of the day, the benchmark or the government bonds would be somewhere close, maybe plus or minus 2% from there, is probably how they're going to get priced. Yeah,
all right.
Yeah.
All right. Now, for the benefit of our viewers, Victor, kindly draw for us a clear picture of how the mortgages from the KMRC will be different from the normal mortgages that are being offered in the different banks today.
First of all, what I think is they'll probably offer longer tenors.
Definitely.
And again, one of the objectives of this fund, the setting up of this company, is to fund low-cost housing. So probably because more funds will be available, more mortgages will be available, we'll probably see most of these mortgages generated from this scheme will be a lot more accepting and a lot less discerning. So a lot more people will actually fit into the requirements, I think. Probably they should expect a lower interest than currently what the banks are offering.
All right. Now, you've just mentioned low interest. Now, with the interest being so low, because that's exactly what they're trying to, the World Bank and the Treasury are trying to bring in, the risks are definitely going to be high. So with that said, how sustainable is this project going to be, knowing that the risk of default is high?
Well, I wouldn't say high. At this point, not unless they give us a clear picture of who they're lending to and who responds to this quicker. It's quite difficult to say whether defaults are high or not. But on that, I don't think the interest will be too low. I think it will be priced. Hopefully, they'll be priced correctly. But what I see initially is probably the uptake might be lower because of there's still gap in knowledge about what is available on to those people who are trying to get mortgages. I think there's still that knowledge gap. So initially, we might not see the interest rate dropping so fast, but as the pool gets larger, the risks actually shrink. So as long as the pool is diversified enough, I think they could actually be able to at least manage the risks involved.
So this is a project that you're saying being successful?
It would be successful, but there are a few challenges I foresee already. One of them is getting funding from the capital markets. For people to invest, for investors to get into this, to buy these bonds from this company, a few things have to be clarified, like for example, liquidity. Investor appetite. Is there really an appetite for bonds that are 30 years, 20 years long? In the current market, there is really low appetite for bonds that long. So I don't know how they will get funding locally, in my opinion. I see that as a challenge. I think there is enough potent demand. There are people who actually can afford mortgages that cannot get it because basically of accessibility and pricing. So I think initially they can actually get really good candidates, in my opinion, because there are actually really people who really qualify. But the issue is really the pricing and accessibility. There is just simply not enough money to lend out to the demand. But the issue, of course, around land and land reforms. For this to be actually successful, it needs laws and regulations to regulate the land, or basically the assets to which these mortgages will be secured against.
Okay, so you've mentioned for the obstacle, or rather the challenge, which is the land reforms, they need laws and regulations to put them, very strict ones, to put them in place. Now, how are they, from where you sit, how will they solve the challenge of capital funding and demand?
In terms of capital funding, I think
what would be the best way for them to actually get the funding?
Funding, they will probably have to source from a mix of local and international funds.
Yeah.
So I will see how they will source this. Maybe there'll be World Bank might help them a bit with the $160 million USD. They're saying the
World Bank has already given them 25 billion Kenyan shillings.
Yeah.
Now, how will they? What's the best way to make themselves as attractive as possible to the investors out there?
One of the things is the rates. The rates have to be priced correctly, in my opinion. It has to be compensate investors enough for them to take the extra risk away from government and for taking longer tenors. So the pricing is we're yet to see, but has to be really correct for them to attract the interests they're looking into. In terms of land reforms,
you've mentioned they need to put proper structures and laws and regulations, and of course, for the demand, it's proper visibility.
Yeah, they have to go out there and sell the idea to the
All right, well, thank you so much, Victor. That was it for our markets today, this evening. My name is Nina Shivandongo. Anywhere Metropole TV has a lot of business programming for you. I'll be back at 7 p.m. with our 7 p.m. Metropole News.